Welcome to the Lend Academy podcast, episode number 276. This is your host, Peter Renton, founder of Lend Academy and co-founder of Lend It Fintech. Today's episode is sponsored by Lend It Fintech Digital, the new online community for financial services innovators. Today's challenges are extraordinary, with the upheaval affecting all areas of finance. More than ever before, we need to come together as an industry to learn from each other and make sense of this new world. Join Lend It Fintech Digital to connect and learn all year long from your peers and from the fintech experts. Sign up today at digital.lendit.com. Today on the show, I am delighted to welcome back Mike Cagney. He is the CEO and co-founder of Figure. And, Figure has been around for actually not that long, but as you'll find out in this show, they've accomplished a huge amount and really taking on several different verticals inside fintech and really making a big splash. We talk about the Provenance blockchain and how they've moved from really 1.0 to 2.0 and what that means for a lot of the offerings they have. We also talk about a new initiative that I just found out about today, and that is Figure Pay, and that's launching early next year, and again, somewhat revolutionary in how they are rolling out that product. We talk about the securitization space, of course, because that was really sort of the initial kind of use case for the Provenance blockchain. We talk about their bank charter because they just applied for a bank charter very recently. We talk about what the thinking is behind that. And Mike also gives his perspective on the vision for what is coming up for Provenance and Figure. It was a truly fascinating interview. Hope you enjoy the show. Welcome back to the podcast, Mike.
Thank you.
Okay, so it's been a while since we've had you on. In fact, this is the first time we've had you on since you started at Figure. So maybe we can just get into some background. It seems like Figure continues to evolve as a lot more than what you originally started out with. So why don't you give us a little bit of history of Figure and also of Provenance as well?
Sure. So we started Figure back in 2018 with the idea that we could use blockchain technology to really drive some transformational change in financial services. The idea that we could disintermediate a lot of intermediation in not just the lending vertical, but the asset management vertical, the banking and payments vertical. And so we worked together to build a blockchain technology called Provenance. And one of the initial things we realized was that, in 2018, the banks weren't ready to run into blockchain. And, a lot of interest, a lot of focus. Every bank had a blockchain technology team that they funded to, investigate and do weird projects in blockchain. But no one really wanted to do production applications. And so we ended up creating Figure Lending really as a first mover to de-risk Provenance blockchain. And, and obviously in that context, having control and being able to manage our own destiny in that regard. And so, and given that we were building a lending business, we said, well, if we're going to build a lending business, let's do something that's greenfield and interesting and where we think the economics make sense. And we chose HELOC to start with. And we did a lot of innovation around HELOC origination outside of blockchain, right? So generating a 5-minute HELOC has very little to do with blockchain and a lot to do with just better technical processes and so forth. Mm-hmm. But, effectively, our goal was to take the distributed, trustless, immutable nature of blockchain, the function of a ledger, registry, and exchange, and demonstrate whether we could or couldn't realize savings using the technology for asset origination, financing, and securitization. And what we were able to do is show that with the technology on our first securitization, which was done March of this year, soup to nuts from origination through financing through securitization, about 117 basis points of cost savings. And another transaction, another securitization, Saluda Gray did behind us on Provenance, where it was about 125 basis points of cost savings. And so these are important proof points for us in the context that this is real, it has a real economic impact, real economic value. And we've done a lot of work around lending where we use blockchain for participations. We use it for wholesale, whole loan trades. But within Figure's also evolved into several other verticals. So, for example, we have a banking and payments initiative called Figure Pay. and it's launching in Montana in January, in Missoula, Montana. And the whole focus of FigurePay is it's using a blockchain ledger to manage the bank accounts, the movement of money, and any two entities on that blockchain who transact. So for example, if I were to pay you and we're both on FigurePay, it's using a blockchain rail, not an interchange rail.
Interesting.
And this is where we think there's a huge opportunity to go after that interchange market, which is, everyone hates it. It's enormous, but that's how you move money today. And so we think, significant opportunity there, but we're doing other things, fund services. So we have a marketplace that hosts funds, where our digital fund services business will do kind of a full package of originating your fund, the documents, custody admin, all on blockchain. And we leverage this feature called Passport that does investor accreditation, BSA AML, for raising capital. So I could, do a 506c through DFS soup to nuts in a couple of weeks, and then use the blockchain as a capital raising vehicle for the funds into that. And then my favorite thing we're doing is we have a cap table management platform called Adnalas. And it's, in part, it has very little to do with us wanting to go after Carta, although we are obviously competing with Carta in that construct.
Right.
But it's more, in Adnalas, the equity for a company is now a digital certificate on the blockchain. And what that means is that you get all the benefit of bilateral transaction, real-time settlement, et cetera. And so it's built in a way that allows a company to turn on a secondary offering, leverage our Passport for investor accreditation, BSA AML, and manage their both primary and secondary market exposure in a much more efficient way. And this is really how we're thinking about the opportunity to go after exchanges. So, within Provenance, everything's bilateral, T0 settlement, no counterparty risk, no settlement risk. Very different than the NASDAQ or the NYSE or any other stock exchange out there. And the top 7 exchanges have about $120 billion of market cap. And so Adnalas is kind of our beachhead into that opportunity set, where we start off with startups and private company cap table management, private company secondary offerings. But when they go public, we hope to have the capital and the resources to say, why list on the NASDAQ or the NYSE? Why don't you just stay here? It's T0, you've got the market. And our hopes are that it's going to be a successful way to go after that opportunity.
Okay, well, man, there's a lot to unpack there. You are in a huge number of different, interesting initiatives there. That maybe we could just take a couple of them to start off with. Let's just start with the securitization. I've seen I read about the first securitization you did and the second, and to me, you're taking away all this cost. So regardless of whether you all the other advantages that are obvious when you're doing transactions this way, I mean, why aren't people, or maybe are people flocking to try and do this? Other originators trying to sort of put their assets on Provenance and do transactions the way you've done the HELOCs.
So there's a couple of dynamics to it. So one is they are starting to do that, and so Bob Hershey, who runs our capital markets effort, is working with several originators right now to begin to originate and leverage the capital market benefit of Provenance. I think one of the biggest limitations that we had was when we initially built Provenance, it was what we would describe as a permission private blockchain, right? You had to go through Provenance Blockchain Inc. to access it. Provenance Blockchain Inc. designated who the stakeholders were on that blockchain, which are 12 financial institutions, including names like Franklin Templeton and Experian, all well-known names. But we did it that way because it was the best way to put a bridge between where the banks and the hedge funds and the buy-side folks were versus where blockchain was. And what we've been able to, and so one of the challenges of that is the way the fee structure was set up is it was designated by Provenance Blockchain Inc. So if you were to originate loans on Provenance Blockchain Inc. would come in and say, you're saving $100, we're going to charge you $33. Mm-hmm. And by and large, that structure works in the sense that it provides a mechanism of economic for the blockchain. It gets distributed out to the hash holders. That's why hash is one, and Provenance is one of the most valuable blockchains in the marketplace today. But it created a significant barrier in that we couldn't open source it, and we couldn't release an SDK, a software development kit, to allow people to onboard themselves. because if we did that, you could circumvent Provenance Blockchain Inc. and not pay any fees.
Right.
And so there was a significant limitation on your ability as a third party to access. And just as we created Figure to de-risk the blockchain, it creates a competitive dynamic where if I go into another HELOC originator, for example, they're going to say, "Whoa, I don't want Figure looking at my stuff." And we couldn't say, "Well, then just take this SDK and do it yourself." And so what we've done very recently is we've migrated from what we would call 1.0 to 2.0. And 1.0 being permission private, 2.0 being decentralized public. And we moved off of a very heavily customized version of Hyperledger onto Cosmos Tendermint as the underlying infrastructure, and where we've moved all these applications like Marketplace that sit on top of it. And now we have the ability to charge gas fees, very analogous to Ethereum. So you pay for processing. It allows us to open source the blockchain, publish the SDK out, and that's going to be a huge catalyst to drive adoption in, because we no longer have to be involved.
Right.
Up until now, Figure had to be part of your process to onboard. And so I think a combination of that plus just people wanting to see some demonstrated economics, I think we've de-risked it. And now with public accessibility, I expect that we're going to get significant adoption onto it. The economics are too meaningful to avoid.
Yeah. I mean, I can understand that. So then has there been a securitization? It doesn't sound like there has been on the 2.0 blockchain. Are you got another Figure HELOC deal sort of in the pipe?
Yeah, so we do, but what we're really interested in is we've got a prime jumbo first lien deal. And what we're trying to do is demonstrate the efficacy of this beyond HELOC. And we're doing some work in unsecured consumer. We've done some work in student loan refi. But the real one we're targeting is mortgage. Mm-hmm. And we think there's such an opportunity for mortgage originators and such an opportunity for the GSEs and the FHA to leverage this technology. And much like we did with HELOC, we think we need to do a couple of transactions to de-risk it and demonstrate the economic benefit. But the dynamic here is, if you think about a mortgage originator today, let's say I'm selling to Fannie Mae, one of the fastest times from closing the loan to delivering to Fannie Mae is 21 days. Usually it takes longer than that. If I'm an originator, I'm eating up my equity capital in my warehouse to aggregate those assets for 21 days. I'm taking market risk in terms of what happens to the price of those assets by the time they're delivered through. And the agencies, when Fannie buys those loans, they're creating a 55-day mortgage pass-through. So the cash flow you get today was from 55 days ago. And they're paying for the drop on that. Blockchain solves all of that in the sense that you can deliver the asset the day you fund it. Because of the immutability and truth aspect of blockchain, you know exactly what the loan is. Mm-hmm. And because of the real-time cash flows and real-time remittance, you can actually do a 1-day pass-through, not a 55-day pass-through. So we think there's an enormous opportunity here, and we're going about de-risking that by doing a prime jumbo securitization, not a conforming mortgage securitization. Right. But directionally, it's the same thing. And so that's one of the big focuses that we have for Q1 is to get that transaction done and use that as a way to kind of crowd in broader adoption from the non-bank mortgage originators and the bank mortgage originators. Right.
Now that's obviously that's the biggest market of all. So if you can get some traction there, you're well on the way. I mean, do you foresee a time? And is this your goal? Is you think that half the securitizations in multiple asset classes running through the Provenance blockchain?
We hope it's Provenance, but whether it's Provenance or something, everything's going to end up running through the blockchain as it relates to capital markets, because the value, if you think about the impediments to markets today, it's do I trust you? Do I know what you're selling me is real? Do you really have it? And in that construct, if you think about equity trading, for example, there's actually 5 parties involved in an equity trade, and they each take a little bit of that transaction. And it's because I can't trust you and you can't trust me. The whole benefit of the blockchain is exactly what the asset is, and I don't have counterparty or settlement risk, and that provides a huge amount of opportunity in terms of making markets more efficient. And so, whether it's securitization, whether it's whole loan trades, whether it's equity trades, I think everything is going to end up moving to blockchain. And the issue is, is that going to be provenance? Is it going to be an Ethereum derivative? Will it be Bitcoin? The challenge with Bitcoin and Ethereum is the scalability.
Right.
And that's the biggest hindrance that we've had. And there's certain aspects and benefits of Cosmos Tendermint in terms of being able to run parallel instances to deal with that. And we've spent a lot of time addressing the scalability of blockchain, where you can pull a 10,000 loan tape off of provenance right now, and it's just as fast as pulling it from a database. There's no difference. Mm-hmm. And that was an important aspect to us. But I think one of the things I'll build on in what you just said, we're very focused on scale. And so we're constantly looking at situations and opportunities where we can take our technology and partner with scale to demonstrate blockchain in a bigger, more meaningful way. And we actually came very close, in the last 4 weeks of doing a transaction with one of the very large non-bank mortgage originators, where we were going to contribute our technology into that entity and build something that we felt was very differentiated, where we were going to be able to massively reduce origination costs and then have this downstream potential for blockchain. And given the nature of Figure as effectively a holding company across all these verticals, I think what you'll see in 2021 are pursuing certain circumstances where we can either contribute our technology in a merger basis. We're going to do a SPAC, so we'll have that vehicle on a public company basis, and look to take some of this tech and some of this de-risking that we've done, and rather than organically build it out, merge it with scale and get there faster to the proof point.
Interesting. So then you're imagining Figure then being almost like a SaaS provider of the technology. Is that where you're moving?
Well, Figure has a relatively large SaaS business, and that business is one of the things I'll probably spin out.
Okay.
Right? So you can think of Figure as a holdco where we have a large amount of the economic of the blockchain. And each of these individual businesses, it's sort of the proverbial, the parts are greater than the sum, right? Why do you have a cap table management company in the same business that does lending, in the same business that does SaaS? These things are better off broken out. And it's just, as we start getting maturity with the technology, we'll start breaking these out in 2021, and you'll start seeing that happen, through M&A, through SPAC, through other types of activity in the marketplace.
Okay, I want to talk about Figure Pay, which I didn't actually know about until you just told me a few minutes ago. So who are you trying to go up against there? Are you trying to do, is this like a merchant sort of offering? Is this person to person? What is the market? Sure.
So I'll give you a little bit of history on it, and then what we're doing right now, and then how this ties into the OCC charter as well that we filed at the beginning of the month. So basically, if you think about to when we built SoFi Money, what we did is we had an omnibus bank. In that case, it was WSFS, and we had a source code license of Profile, and we built our own banking ledger, and we built our own integration into the ATM and ACH and Wire, et cetera. And what WSFS was really the repository and the integration into Fed Settle. And so, in the construct of provenance, we have these omnibus banks, and these are banks that act as a bridge between blockchain and fiat. So, for example, if you were buying $50 million of loans from me, you would push $50 million into Silvergate, and they would create a $50 million entry in your digital wallet. And you and I would face off, and the blockchain knew that you had the stable coin, I had the loans, and it would just register the ownership of one to the other, and hence the real-time transaction without counterparty or settlement risk. And as we were looking at this, we said, well, look, why couldn't we do something where we build a blockchain ledger, banking ledger, similar to what we did before, build all the off-ramp interfaces into the ATM, ACH, et cetera, leverage one of our omnibus banks as an omnibus bank, right? Integrating into Fed Settle and holding the cash, fiat, and so forth. And we can do some interesting things with this along the lines of, small dollar credit, for example, for thin file consumers, because we get certain information, transactional history, geolocation, that allows us to underwrite in a way that we can make up for the fact that we don't have a thick file. But it has this really interesting advantage in that because it's blockchain, it has this bilateral transaction capability, whether it's loans or whether it's me paying a merchant or me paying another consumer, where it allows us to bypass interchange. And so the benefit being that if you're a merchant, I'm transacting with you on Figure Pay, and we're both on FigurePay's back-end rails. You don't necessarily have to be a FigurePay customer because we private label it for other institutions. So, XYZ could offer this solution as well, but it's the same back-end rail. Rather than going through interchange, it's going to go through the blockchain rail. And the benefit to the merchant obviously is, one, the cost. Mm-hmm. I think I might be a little bit off on the numbers, but I think Walmart, had $6 billion of profit last year, paid $2 billion in interchange expenses.
Right.
And so, massive number. But also from the merchant standpoint, it eliminates chargeback because it's stablecoin, it's cash, and eliminates the settlement time, right? It's instant. And the whole aspect is the consumer doesn't need to know, nor do they even care that they're on a blockchain ledger, right? It's just cash, and they transact the same way that they always do. And so we see this initially as a really interesting solution for underbanked consumers. And we would have all the bells and whistles like payday advance and et cetera that some of the other folks have out there. But we see it as an interesting solution for underbanked consumers, as a much better viable alternative than prepaid debit. And because it's not relying on a bank on the back end, as a lot of the challenger, quote unquote, US challenger banks are,
sure.
As very few of them have banking licenses. There's a significant economy of scale that's there that we think we can take advantage of. And so the challenge we have on this is, we're looking at our business, and next year we're going to need over 200 licenses. We
right.
already have well over 100. We have to continue to add them for money transmitter licenses and so forth. Because, we have mortgage licenses, we have non-consumer lending licenses, we have servicing licenses, money transmitter licenses. And the challenge with having over 200 licenses is, not only is it the cost, it's the consistency of the product, right?
Right.
That what we deliver in Colorado is different than what we deliver in California. And we had optimism that the states would build some kind of reciprocity, and they just haven't done it. Mm-hmm. And so we made the decision in early November to apply for a national bank license through the OCC. It's novel in the sense that we're not doing FDIC insured deposits directly. We're partnering with a bank to do that. We are taking institutional deposits. So we're deposit taking, but not FDIC insured deposit taking. And, we see this as a way to, it's sort of ironic that we build this technology, we massively lower the cost to deliver solutions to consumers. And all of a sudden you can now deliver solutions into that underbanked segment in a profitable way, in a way that's better than what they have today. And then you layer in all the regulatory complexity with 200 state licenses, and you start to lose the ability to do that.
Right.
So this OCC license, we think, is really critical for our ability to deliver solutions into underbanked consumers and drive real financial inclusion, which, there's been a lot of talk around financial inclusion around fintech, but not a huge amount's been done there.
Right.
And so, we see this as really a meaningful way to do that. And obviously what we're trying to do on the blockchain side is go after interchange. Visa, MasterCard, market cap, the top 3 interchange providers, market cap's over $750 billion.
Right.
So there's a huge opportunity there. And, this is the first thing that I've been in financial services since the late 90s. This is the first thing I've ever seen that's a viable way to go after that interchange.
Mm-hmm. I know many have tried, and no one's really got anything going yet. So what is like for FigurePay, are you taking basis points on the transactions similar to an interchange and just making it a lot lower, or what's the economics?
Yeah, so that's right. And look, we still have a Visa debit card on FigurePay because right. You can't be reliant just on a blockchain rail, because then you have a chicken and egg problem, right?
Yeah.
And so it's completely interoperable between interchange and between provenance. And we're just taking on provenance transactions a much smaller cut, because an interchange transaction, there's 7 parties that are dipping into that and pulling economic out. This is bilateral. It's just me and you, right? And so we can take a much smaller cut and make it very economical for everyone involved.
So then, like on the merchant side, who, like, because you really, to get, this the chicken and egg problem is, are you going after some big merchants to really because that's it. They can benefit as well. They don't want to be beholden to Visa or MasterCard.
100%. So we're taking a barbell approach, which is we're having some conversations with very, very large merchants. And then when we pilot this in Missoula, Montana in January, we're doing it with a bunch of farmer market participants.
Okay.
and getting them set up. So FigurePay will work, Bluetooth through NFC, or it'll work through QR code scanning. And we're setting them up. And we actually think it's going to be a really important proof point to then go to the big merchants and say, look, this is how it worked. And, there's obviously a lot of enthusiasm because of the local aspect of doing this, around signing up and participating. And but it's a barbell approach, and absolutely there are big merchants that are going to want to adopt into this because of the amount they pay on interchange today.
Right. Okay. So I want to just talk about the investor side. I was on your website on the weekend and I signed up for Hash and I went through the accreditation process. It's all using Plaid and very, very simple. I mean, I feel like there's so many ways you could take that, but what are you planning on having a platform of different assets for individual investors, or what are you doing with that?
Yeah, so that's really what Marketplace is. And the idea is that as an investor, a retail investor, an institutional investor, an institution, you can go in and basically go through the Marketplace and find what you want. So for example, Figure World Equity Fund is on the Marketplace. Yep. If you want to subscribe, you can do the whole thing without any human intervention, right? And that's the point, is we're trying to make it easy for people to be able to access alternative product. One of the things that we do with Passport is that Passport moves with you. So when you go from one investment to another, you don't reaccreditate, you don't reestablish. And so it makes it a much more seamless process. I literally, part of why we built this is I stopped doing private investments about a year and a half ago because I couldn't stand filling one more accreditation.
Right.
Like I'm going to jump out a window. They're all different. They all ask you stupid stuff. They never handle my trust right, et cetera, et cetera. So it's, the intent is to have a general marketplace that relies on this whole aspect of trustless bilateral settlement, where individuals can come in, they can search for what they want. So loan buyers can come in and search for, sub 680 loans over 8% coupon in California, and they can go to 3 different marketplaces that have that and participate in. You could come in and say, I'm looking for, venture capital, early stage fintech, and be able to find funds listed on Marketplace. And the other interesting thing about the Marketplace is because it's built on an exchange, it allows for the secondary trading of those fund interests, right? So, if you own a private equity fund and it's, 5 years into a 10-year life cycle, you could market that on Marketplace and sell it on a secondary basis.
That's super interesting. I tell you, I'm excited to kind of explore that, but I want to move on to Hash, because Hash is the token for the Provenance blockchain, and you said that you were intending to do an IPO of that at some point. What are the plans for Hash now?
So, and I'm glad you asked. So the Provenance 1.0, as I talked about earlier, it was very clear that Hash was a security. And so what we wanted to do is we wanted to do a public offering of that. That meant we needed an exchange it could trade on. And so we have been working with the SEC and gotten what we needed there, and now working with FINRA to get approval to operate an alternative trading system on Provenance that will allow us to run marketplaces for securities. And we're very optimistic that we're close to getting approval for that. It'll be the first one that's been approved for a blockchain to trade digital assets. But what happened along the way is we said, we're moving from 1.0 to 2.0, and somewhat analogous to Ethereum, where the SEC said it probably started off as a security. It's probably not a security now. In 2.0, with the blockchain being decentralized, open sourced, no central control, third-party contribution into it, we think Hash is 2.0 Hash is really a utility token. And so, what we anticipate is we would swap the 1.0 investors into the 2.0 utility token, and that token would list on, some of the popular crypto exchanges. And so, relatively big transformation, but really underpinned by the evolution of the blockchain and our ability to go to a decentralized public network. Given that the industry's gotten comfortable with the technology and comfortable with how the process works.
Right, and Hash will underpin everything, right? Well, it underpins Figure Pay. Is that like everything gets put into, like all the transactions go through? There is they're transferred from fiat currency into Hash. Is that correct?
So you can think of Figure Pay as having two things that underline it. One is effectively stablecoin, right? Because that's reflecting what's in the Omnibus Bank account. Where Hash plays a role is effectively every time you're writing or every time you're processing on the blockchain, you're paying gas fees. And you have to, so let's say I incur $100 of gas fees. I basically have to buy $100 of hash on the exchange to then distribute out to the ecosystem, right? So think of hash as still the underlying mechanism to distribute the economics of the blockchain, but in a slightly different way than we did with 1.0.
Right. Okay, that makes sense. So then with your, I'm interested to sort of hear the evolution of your thinking here, because I mean, obviously, when you're at SoFi, you famously did that Super Bowl ad with anti-bank, like don't bank SoFi, and you had that sort of, there was a position that you were taking, and I'm curious to see how your thinking has evolved from that time period.
Yeah, I think, and it's funny because I've been asked about this a lot recently, and a lot of times people bring up the comment I made about banks are dinosaurs and I'm the meteor, which I'll never live down. Like a lot of that was from a marketing context, right? In terms of it wasn't that the function of banking was a problem. It was the way that banks delivered service into their members, into their customers that we felt we could improve on. And I think SoFi has done that and continues to do that. I think in the context of provenance, as I said, with Figure, I've created a lending business. I've created a banking and payments business. We've created a cap table management company, all these things. But not because we want to compete with these traditional inline institutions. It's actually to crowd them in, to de-risk the blockchain and crowd in adoption. These businesses have to exist on their own right. They've got to run positive contribution margins, be profitable, and so forth. And effectively, if you think about all the different verticals that we have, in 2021, every one of them is profitable except for one, which will take us to early 2022 before we hit that. But they need to exist on their own right. But they're really there to show how to use it, how to access the blockchain, how to unlock value. And so we're in a very synergistic relationship with the banks from a partnership standpoint. We actually had some very encouraging support from the banking community related to our OCC application. Whereas, the last time I did a national bank application, I certainly did not get very positive support.
Right. Yes.
And so, I feel like what we're doing is we're creating value, and even the institutions that you think would be concerned about disintermediation. So, like a custody bank, for example, we have a huge amount of activity with some of the custodians on provenance right now, where they're looking at the technology and saying, this is coming. How do I reinvent my business to take advantage of this? And I'm not trying to eliminate any of these folks. I'm trying to give them a better way to deliver solutions.
Right. Okay. So obviously the OCC, you've got someone who there's probably many of the regulators would not be able to understand exactly what you do, but I imagine the current head of the OCC with his background would probably gets what you're trying to do pretty well. Has that been helpful in this process?
I think it's been extremely helpful. I think, Brian not only gets what we're trying to do, he actually sometimes thinks like 2 steps ahead of us in terms of the business evolution. So, I'd say he's very steeped in blockchain and the benefit it has to the financial system. So it's been extremely helpful to have someone like Brian in that seat. And I think he's really trying to drive situations. And one of the things he likes about what we're doing with FigurePay is, it really is rooted around financial inclusion in a sustainable way. And I think that's a big thing for Brian, which is, blockchain technology to level the playing field, right? Rather than further delineate the haves and the have-nots.
Yeah, no, he's got that whole Project Reach thing he talked about. I mean, he's a very big proponent of that. Okay, so we're just about out of time. But before I let you go, you've got a lot on your plate here. You've got a lot of different, things that could really, each one of these could be a revolutionary, company. But what's your vision for Figure when you look down the road?
So I think our vision is that provenance is the preeminent blockchain for financial services. I think what you'll see with Figure is it will break apart into 4, 5, 6 different companies along the verticals that we have, and as I said, each of them will be viable and hopefully a market leader in what they compete in, and I think when we get to that point, it will have been we'll have succeeded in what we set out to do.
Okay, well, it's going to be fascinating. I wish you all the best. I'm always inspired when we chat, Mike. It's fascinating to see what you're accomplished in a very, very short amount of time. So thanks so much for coming on the show.
Thank you for having me.
Okay, see ya. Wow. As I said, when I come away from my conversation with Mike, inspired, but also somewhat in awe of all of the different things that he's doing and how quickly that figure and provenance is moving. And as he says, any one of these initiatives really could be groundbreaking for fintech. And we've really said 5, 6 of these things that can really change. It could change the world. And I am very, I'm really looking forward to seeing how these things play out. Securitization, payments, capital markets, cap tables, all these things are I said they're fascinating in their own right. I think the fact that he's wanting to go and get a banking license at this time is telling, and I think it really will. It's a very different approach than really doing it sort of inside the banking system, inside the industry, rather than trying to come out from an outsider perspective. And I think that's important. As he said, he's getting a much better reception now than he did initially. Anyway, before I sign off, if you enjoyed this show, please go to iTunes, Stitcher, or wherever you are listening to this show, and please give us an honest review. I read every single one. We appreciate that you're doing that. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's episode was sponsored by Lend It Fintech Digital, the new online community for financial services innovators. Today's challenges are extraordinary, with the upheaval affecting all areas of finance. More than ever before, we need to come together as an industry to learn from each other and make sense of this new world. Join Lend It Fintech Digital to connect and learn all year long from your peers and from the fintech experts. Sign up today at digital.lendit.com.